Making $100,000 a year used to be the gold standard of the American dream. It was the finish line, where you could finally stop worrying and start living. But today in 2026, that finish line has moved so far that most people are running out of breath just trying to keep up. Recent data shows that 62% of Americans earning over six figures are still living paycheck to paycheck. Think about that for a moment. 6 out of 10 people with high incomes are one missed payment away from a major financial crisis. If you feel like you are earning more than ever, but your bank account is emptier than ever, you are not crazy. You are not necessarily bad with money either. The truth is that our modern economy has become a financial sieve designed to drain your wealth through 1,000 invisible cuts. I have spent years analyzing how the middle class is being squeezed, and what I've found is a silent crisis. It is a world where your purchasing power has dropped by over 30% in just the last few years. It is a world where the very systems meant to make your life easier are actually making you poorer. Today, we are going to look at exactly where your money is disappearing every single day. I will reveal the 3 ghost taxes that the government does not talk about on the news. And more importantly, I will give you a tactical survival plan to plug those leaks and reclaim your dignity. The old maps no longer work in this new economic landscape. We must understand why earning more is no longer enough to stay ahead. The struggle you feel is real, and it is shared by millions of hardworking families across the country. It is time to look behind the curtain of the 2026 economy. The 3 ghost taxes of 2026. The first thing we have to understand is that the inflation numbers you see on the news are often a lie. The Consumer Price Index might say, inflation is at a manageable level, but your wallet knows the truth. This is what I call shadow inflation. It is the massive gap between the official government data and the actual cost of staying alive in 2026. If your insurance premiums went up by 20% and your groceries went up by 15%, a 3% report is meaningless. Shadow inflation is the silent thief that steals your future while you are busy working for it. It affects everything from the electricity that powers your home to the car you drive to work. But there is something even more sinister happening right now called shrinkflation. You have seen it at the supermarket every single time you go shopping for your family. The cereal box is the same height as before, but it is 2 inches thinner than it was last year. The bag of chips is mostly air and half the weight it used to be. You are paying the 2026 price for the 2020 quantity. Companies are hoping you are too busy or too tired to notice the missing ounces in your cart. They are counting on your fatigue to hide their rising profit margins. Then, there is skimpflation, which is when companies charge you the same amount but reduce the quality of the service. Think about the last time you stayed at a hotel or visited a favorite local restaurant. Fewer staff members and longer wait times have become the new normal in our service economy. Self-service kiosks are replacing human interaction at every turn. You are doing more of the work while they keep more of your hard-earned dollars. The quality of materials in the clothes you buy and the furniture you own is also declining. Things are built to break so that you are forced to spend more money to replace them. But the biggest invisible leak in the modern household is what I call subscription creep. We have moved from an economy of ownership to an economy of endless monthly rent. You used to buy a movie once and own it forever on a shelf in your living room. Now you pay $15 a month for 5 different streaming services just to have access. You used to buy software for your computer one time, and it worked for years. Now you rent that same software every single month just to keep it from locking you out. Even car companies are starting to charge monthly fees for features you already paid for at the dealership. The average American now spends over $200 a month on subscriptions they often forget they have. That is nearly $2,700 a year leaking out of your pocket without a single conscious decision. This is money that could be going toward your retirement or your children's education. These are the silent wealth killers of our decade. The psychological sieve. Why do we let this happen to our personal finances? The answer lies in how our brains are wired and how technology exploits that wiring every day. We are living in the era of the convenience trap. When you pay with a physical $100 bill, your brain registers a real sense of loss. You see the money leave your hand, and you feel a small sting of pain in your mind. But when you use a digital wallet or a credit card, that pain is completely neutralized. The digital world has made spending money so frictionless that it has become almost invisible to us. One-click ordering and automatic renewals have turned your bank account into an open faucet. The banks know that when the friction is gone, the spending goes up by 30% or more. For those of you in the 55 to 80 age range, this is especially dangerous to your savings. You grew up in a world where you knew exactly what things cost and where your money went. Today, the system is designed to keep you confused and detached from your capital. It is harder to track your spending when it is spread across dozens of digital platforms. Then, there is the phenomenon of lifestyle creep. As we earn more, we naturally want to enjoy the finer things in life. But in 2026, the line between a luxury and a necessity has been blurred by social media. We see our peers traveling to exotic locations or driving luxury vehicles, and we feel a pressure to keep up. We tell ourselves we deserve it because we worked hard for decades. And while that might be true, your bank account does not care about what you deserve. It only cares about what you can sustain over the long term. Social media has created a global stage where we are constantly comparing our behind the scenes with everyone else's highlight reel. This constant comparison leads to emotional spending that we often regret later. This is a particular struggle for those of you approaching retirement. The cost of healthcare and insurance for seniors is skyrocketing at a rate far higher than the average income. The pharmaceutical companies and insurance providers are taking a larger bite out of your fixed income every year. If you are upgrading your lifestyle at the same time these costs are rising, you are walking into a trap. You might be earning good money today, but if you are not retaining it, you are essentially working for free. You are trading your time and your health for objects that do not provide lasting happiness. The 2026 Survival Plan. If you want to stop the bleeding, you have to change your relationship with the economic system. The first step in my survival plan is the 30-day financial audit. I want you to sit down with a physical piece of paper and write down every single recurring payment you have. Go back through your bank statements for the last 3 months very carefully. Do not skip over the small charges because they are the ones that add up. You will be shocked at the small $9 and $15 charges that have become parasites on your wealth. If you have not used a service in 30 days, you must cancel it immediately. You can always sign up again later if you truly find that you miss it. Most of the time, you will find that you do not miss it at all. The second step is what I call the cash-only experiment. For the next 2 weeks, I want you to pay for your groceries and gas with physical cash only. Leave the credit cards and the digital apps at home during this time. When you have to physically count out the bills for a cart of groceries, you will realize how much prices have risen. You will find yourself putting items back on the shelf that you do not really need. This simple act recalibrates your brain and forces you to prioritize value over convenience. It brings the weight of your financial decisions back into the physical world. The third step is to shift your focus from gross income to retained wealth. Stop worrying about how much you make and start obsessing over how much you keep. In the 2026 economy, a person earning $60,000 who keeps $20,000 is wealthy. Someone earning $200,000 who keeps nothing is actually poor. They are just a high-income poor person. Wealth is not the car you drive or the labels on your clothing. Wealth is the number of days you can live comfortably without a paycheck. It is the ability to say no to a job you hate or a situation that does not serve you. For those of you looking toward your golden years, this is the only metric that truly matters. Finally, you must learn to choose utility over status in every purchase you make. Every time you're about to make a major purchase, ask yourself one simple question. Am I buying this for the function it provides or for the image it projects to others? If you are buying it for others, you are letting them control your bank account. The 2026 economy preys on people who care about their social image. It rewards people who care about their personal independence and freedom. True freedom is not found in buying more things, but in needing fewer things. It is about the peace of mind that comes from a healthy and growing bank account. It is about knowing that you are prepared for whatever the future holds. Conclusion. The world has changed, and the old rules of money no longer apply to us. Earning a good salary is no longer enough to guarantee a secure future. You have to be a fierce guardian of your own resources every single day. You have to be willing to be the person who says no to the subscription and no to the upgrade. You have to resist the constant pressure to consume and conform. Because at the end of the day, true wealth is not about having everything you want. It is about having the freedom to do what you want with your time. It is about the dignity of knowing that you are in total control of your future. It is about the legacy of wisdom and security you leave for the next generation. If you found this helpful, please consider sharing it with someone who might be struggling in silence. We are all in this together, and we can all learn from each other. I want to leave you with one final thought to consider carefully. If you could go back to your 40s with the financial wisdom you have right now, what is the one thing you would stop buying? Please share your answer in the comments below, so we can all learn from your experience. Your insight could be the very thing that helps someone else break free from their own financial trap. Thank you for listening, and I will see you in the next one. Disclaimer: this content is for informational purposes only and does not constitute financial or medical advice. Please consult with a professional advisor before making any significant changes to your financial plan or lifestyle.